All right. Hopefully I did this right and all of you guys can hear me. Yep, perfect. So, my name is Spencer Barrett. I'm the first individual to actually present. I had Chapter 3, Exercise 5. This example here, all of this information was taken from the actual book online. So, if you don't know where it came from, that's okay. It's just an example. The problem itself, though, is the exact same on the homework assignment. So I want to kind of take you through exactly what I did and exactly how to get to it. So the instructions are pretty basic. We want to prepare an income statement and a returned earnings statement for August and a classified balance sheet at August 31st, 2017. Now, if you guys did read the chapter, all of this information may make sense to you. But essentially, we need the assets, liabilities, and stockholders' equity. Now, these right here are different transactions that took place during, I called it just Company A. So we have cash here, accounts receivable, supplies, equipment, accounts payable, common stock, revenue, expenses, dividends. And then obviously for each transaction, you can essentially see exactly what happened. So for instance, subtracted 1,000 cash here, got 5,000 equipment, and we still owe 4,000 in accounts payable. So everything equals out. Now we do have common stock over here. Service revenue would be the 9,500. We paid 2,000 in dividends. We had a rent expense of 800. Salary expense of 3,000 and a utility expense of 300. So all the totals are actually down below here. Now, if I did all of the math correct, which actually it was Excel, so it did, we would know that total assets should equal total liabilities and stockholders' equity. So 26,200, 26,200. So we know we have the information here correct. Now, I want to start by coming back up here just to briefly explain it. So the first thing that we're going to do with all this information we did gather is to prepare an income statement. Now, whether it be an income statement or a balance sheet or anything of that sort, we do want to start with revenues or assets. So in an income statement here, first, the company, income statement, obviously, and it did ask for August entirely. So it would be for the month ended August 31st, 2017. So like I said, we want to list revenues here first. Now I did come up here and I saw the only listed revenue would be our service revenue, which is a total of $9,500. So I do want to go put 9,500 there. And since there's nothing else, that's the total for revenues. Now, expenses, there were a couple different expenses. So if I come back up here, we have the salary expense, utility expense, and rent expense. So the rent expense was 800. The salary expense was 3,000. And the utility expense was 300. Then we have total expenses here. Obviously, I have a little tiny equation here that added all these up together to total 4,100. Now, for this, it's pretty simple. We have to do revenues minus expenses to get our net income, whether that be positive or negative. So we could just do 9,500 minus 4,100 to get 5,400. So that would be our net income here. Now, the reason that you have to do all these in a row is because they feed into each other. So moving on to the returned earnings statement, again, company A or company whatever it's called, returned earnings statement. And again, it was asking for the entire month. So for the month ended August 31st, 2017. Now, this did stump me for a little bit, but if you come up to the top here, I looked everywhere the eye could see for a returned earnings statement that we had on August 1st, so at the very beginning. Now we have zero information about that, meaning it could be a new company. They could have just not had any retained or returned earnings or retained earnings. Sorry. Don't know why it says returned. It should say retained. All right. Perfect. Anyway, so we have to assume that it's zero. We just don't have that information. Now, what you want to go ahead and do here, though, is it is asking for the net income, because that net income, essentially, we retain that earning. That's money that could possibly go into our pockets. So we want to add 5,400. And we do know that we did pay dividends. So if I come up here, there's 2,000 in dividends. So you want to put 2,000. So that means at the end of the month here on August 31st, 2017, our retained earnings was 3,400, I'm assuming dollars. So moving on, we want to check the balance sheet here. Now, we did it the long way route, but we know that the total liabilities and stockholders' equity equals the total assets here, just like this equation does show. But now we have to actually account in a more feasible way our assets. So the first asset that I'm going to put down here will be cash. And let's see how much cash we had. We had 15,500. So 15,500. We had accounts receivable at 4,950. So accounts receivable and 4,950. And then supplies. So that could be like inventory essentially. And that would be 750. And then these account for all of the current assets. So you could think of equipment as a long-term asset in this case. So what we want to do is make an equation. That plus that plus that. Perfect. And then equipment was 5,000. So total assets would be that plus that, which would be 26,200. We're matching it up, so we're right there. Now to go on to the liabilities and stockholders' equity. So up here, the only liability under this category was accounts payable. And at the end of the month, it was a total of 2,800. So we want to go ahead and swap this out. Whoops. Accounts payable with the number being 2,800. And then this is just a transition saying that we are going to go into stockholders' equity. So common stock, come back up here, 20,000. And then again, everything feeds into one another. So I go back to the retained earnings of 3,400. I do a little equation to get my total stockholders' equity, which would be that plus that, 23,400. And then one more equation to see if we were all correct, which would be that plus that, 26,200, and again 26,200. So we know that the balance sheet is correct. Obviously, the returned or retained earnings statement has to be correct, and therefore our income statement has to be correct. So I do hope that this helped you guys out. If you have any questions about any of this, please don't hesitate to reach out to me. But I hope the best. Thanks.